We'll go to William on line 6, trying to handle as many of these as we can. Calling from Campbellsville. Welcome to the show, William.
I think it's Doug.
Doug, I'm sorry, I said William. Doug. Hi, Doug.
How are you?
I am doing well, and you?
Just fine.
Good.
Had a question about some money my wife and I invested several years back, approximately $75,000, and of course we lost like everybody else did once the stocks took a big tumble, down to about, or back up to about $65,000 at this point. Question I have is, should we continue to wait for that to come back and hopefully get back to where it's at which point my wife wants to take it out and do something else with it, or should we do something now?
Doug, you sound relatively young. How old are you?
Well, I'm 54.
Wow.
Wife is 59.
Okay, well, see, at that age, there are products out there, and we work with these a lot. They're called indexed annuities, and you might want to check something like that out. And that way, if the market goes up, you can get some of the gains. You're not going to get as much as if the market really takes off, but you get out of the risk area. So I think what I tell people when they're looking at these products, decide if you want to get off the roller coaster or not. Because you could sit around and wait for this thing. Did you watch last week's show?
No, I was working last
Yeah,
week.
real quickly, last week's show we went over. You know on 9/11 of '01 what the Dow was at?
No.
96.05. Guess what was at this past September 11? 96.05. Yeah, so the point is you could wait around for all this to happen. My view, and I'm not a pessimist, but I'm very concerned about the economy, and I'm very concerned about what could be out there over the next couple of years. So the key is, do you want to wait it out? Are you comfortable waiting it out? Then hang in there. If deep down you say, man, this just isn't for me, are there some safer alternatives? Can I do the Buddy Dimling approach and just steady and slow as she goes? Then we've got options for you, okay?
Okay.
But you got to decide that. That's the thing. I don't, you get into telling people to sell securities and all that, and then here I am telling them, yeah, why don't you get out of there? And the market shoots up, he's coming after me with a pitchfork.
And, I think, Tony, that you are very open to, when you talk to someone, a potential client, you want to get their ideas as well, because you may play the game one way you're saying, but you're saying, let's combine our games.
That's right.
I may be a little bit more conservative. You like this annuity. Let's kind of blend them.
You know what he told me, buddy, as he went around and watched me in my swing? He said, Tony, don't change your swing so much. You've got a certain type of body. There's certain ways you hit the ball. Don't try to be like everybody else. See what I mean? So I'm getting confused because I watch him on TV. And
financially that works as well.
Yeah, that's right. What he's doing is he's getting to know me and recommending a swing that's appropriate for me and my clubs. And that's what you have to do in financial planning.
Makes perfect sense.